Good morning, everyone. This is Anika Pompey again. We're going to go ahead and get started. So what I'll do is share my presentation with you all, and we will take it from there. All right. So as I stated, my name is Anika Pompey, and I am a Stakeholder Liaison with the Internal Revenue Service. So in my role as a Stakeholder Liaison, I'm responsible for partnering with tax professionals, business organizations, and social organizations to spread key IRS messaging and to also serve as a point of contact for my partners. So by partnering with organizations such as yours, I can assist in keeping you connected to the information, resources, and IRS personnel you need to help you and your clients or your potential clients thrive in a normal and unprecedented times. So today's workshop is going to be on business structures and filing requirements, which will be the first in a series of workshops presented to you all. So starting a business can definitely be overwhelming. There are many steps that you'll need to take to get your business up and running. And one of the earlier decisions you'll need to make for your company will be the type of business structure you're going to operate as. So today's presentation is going to give you an overview of the different business structures you can operate under and the filing requirements for those businesses. So basically, for today's workshop, I'm going to describe the different business structures, and I'm also going to explain the advantages and disadvantages of those business structures. And then finally, what I'll do is explain the filing requirement of each business structure. So I want to turn your attention to the different business structures. So as I mentioned before, early in the life of your business, you're going to need to decide on the structure of ownership. And there are 5 common types of business organizations. They are the sole proprietorship, partnership, limited liability company, or limited liability partnership, as well as the S corporation and the corporation. So we'll go ahead and get started with the sole proprietorship. A sole proprietorship is going to be one of the simplest type of business organizations. It's an unincorporated business that is owned by one person. The business does not exist apart from its owner, and it is the owner who assumes the risk of the business to the extent of all of his or her assets, even if the owner does not use his or her personal assets in the business. Additionally, the ability to finance the business, known as capital, is limited to whatever the owner can come up with. So a sole proprietor files his or her taxes using a Schedule C or a Schedule EZ net profit from business. The Schedule C is going to be included with Form 1040 to report the profit or loss from operating the business. The sole proprietor also files Schedule SC, self-employment tax, to report the Social Security and Medicare taxes on net profits of the current year's threshold. So if you or your spouse jointly own and operate an unincorporated business in a non-community property state and share in the profits and losses, you are partners in a partnership and not a sole proprietorship. So you should not use a Schedule C or Schedule C EZ, but there are some exceptions to this. So for example, if you or your spouse wholly own and operate an unincorporated business as community property under the community property laws of a state, you can treat the business either as a sole proprietorship or a partnership. And then there's just one more exception, which is going to be known as the qualified joint venture for spouses. All right, so on May 25th, 2007, the Small Business and Work Opportunity Tax Act of 2007 was signed into law, and the effects to change the treatment of a qualified joint venture of married couples not treated as a partnership. And the provision is effective for taxable years after December 31st, 2006. So the provision generally permits a qualified joint venture whose only members are a married couple filing a joint return not to be treated as a partnership for federal tax purposes. A qualified joint venture is a venture involving the conduct of trade or business if, 1, the only members of the joint venture are a married couple who file a joint tax return, 2, both spouses materially participate in the trade or business. 3, if both spouses elect to have the provision apply and the business is co-owned by both spouses. And then 4, it isn't held in the name of a state law entity, such as a partnership or a limited liability company. So under the provision, a qualified joint venture conducted by a married couple who file a joint return it's not treated as a partnership for federal tax purposes. And then all items of income, gain, loss, deduction, and credit are divided between the spouse in accordance with their respective interests in the venture. So each spouse takes into account his or her respective share of these items as a sole proprietor. This generally does not increase the total tax on the return, but it does give each spouse credit for Social Security earnings on which retirement benefits are based. All right, so as I mentioned before, sole proprietors report their income and expenses on Schedule C, profit or loss from business. And an activity qualifies as a business if your primary purpose for engaging in the activity is for income or profit, and you are involved in the activity with continuity and regularity. So after calculating the loss, the profit or loss from the business on the Schedule C, the profit or loss is then reported on Form 1040 with other sources of income to determine your total taxable income. Your Schedule C is included with the 1040 when you file your tax return. So what I have depicted in this particular slide is the front and back copy, the front and back page of the Schedule C, and it includes 5 parts. So it's the parts include your income, expense, cost of goods sold, information on your vehicle, and then other expenses. So the second type of business organization is the partnership. A partnership is a relationship between 2 or more persons who join together to carry on a trade or business. Each person contributes money, property, labor, or skills, and each expects to share both in the profit or losses of the business. Any number of persons can join a partnership. And the advantages of a partnership are that it's easy to organize, it has a definite legal status, and it may have a greater financial strength than a sole proprietorship. But the first disadvantage of a partnership is that the authority to make decisions is divided. The other disadvantage to a partnership is the liability of the partners is usually unlimited. That is, each partner may be held liable for all the debts of the business. For example, if one partner does not exercise good judgment, that partner could cause not only the loss of the partnership's assets, but also the loss of the other partner's personal assets. Partnerships report profit or loss on Form 1065, U.S. return of partnership income. Form 1065 summarizes the business activity of the partnership. A partnership does not pay tax on income from daily operations, and all income, losses, deductions, and credits that are generated by the partnership pass through to the partners. So each partner gets a Form 1065, Schedule K1, partner's share of income, deduction, credits, etc., and the partner reports these items on their personal income tax returns. So you can learn more about partnerships by reviewing IRS publication 541, as well as from the instructions of Form 1065 and the 1040. All right, so on the screen here, I have just the first, a copy of a 1065 as well as a Schedule K1. So again, you're gonna report any income, gains, losses, or deductions and credits on the Form 1065. Even though it's not a taxable entity, this form does need to be filed with the Internal Revenue Service. And the partnership, and then the partnership also has to file the copies of the Schedule K1s with the IRS as well. And once each partner receives a copy of the K1, the income or losses are going to flow through to respective sections of the Form 1040 when you file your income tax return. All right, so I'm moving on to S corporation. Okay, so the third business entity is the S corporation. An S corporation is a small business corporation whose shareholders elect to have corporate income taxed like a partnership. Corporate income losses, deductions, and credits flow through to shareholders for federal tax purposes. Shareholders of the S corporation are going to report the flow through of income and losses on their personal tax returns and are assessed tax at their individual income tax rates. This allows S corporations to avoid double taxation on the corporate income, and S corporations are responsible for tax on certain built-in gains and passive income at the entity level. So, how do you qualify for S corporation status? The corporation must meet the following requirements. So first, it has to be a domestic corporation. Second, you have to have allowable shareholders. So allowable shareholders are going to be individuals, certain trusts and estates, and it can't be partnerships or corporations or non-resident alien shareholders. Third, you can't have any more than no more than 100 shareholders. If your shareholders exceed 100, then you don't qualify for the S corporation status. You have to have only one class of stock. And then lastly, you can't be an ineligible corporation. So for example, certain financial institutions, insurance companies, and domestic international sales corporations don't qualify for S corporation status. Now, in order to become an S corporation, the corporation has to file and submit Form 2553, election by a small business corporation, signed by all the shareholders. This election has to be submitted by the 15th day of the third month of the first S corporation year. So to clarify that process a bit, I'm going to give you an example. If your first S corporation tax year begins on January 1, you must submit Form 2553 by March 15th. Otherwise, the election is effective for the next tax year. The IRS will send you a CP 261 notice, which is notice of acceptance as an S corporation, to let you know it received and approved your election. You should receive your approval within 60 days. Now, I'm going to just add that right now, because of COVID and unprecedented times, we might not make that 60-day window because we are still have backlogs of unopened mail. So what I would suggest doing is that if you are going to file this election, that you mail it to us via certified mail, so you'll have, so you can track it, so you can at least trace it to confirm that the IRS did receive it. And if you don't receive the Form 2553, you can contact the IRS campus where you filed the form. And there's going to be more information on that with the instructions of Form 2553. So there are situations where an S corporation is subject to an entity or corporate level tax. For example, S corporation officer shareholders who provide services to the corporation are considered employees, and their subject is subject to employment tax. So what that means is the S corporation has to issue a W-2 to the shareholder, even though they are considered a shareholder. So by law, the officers of the corporation are employees for employment tax purposes, and their compensation is wages. So an S corporation must pay reasonable compensation or wages to a shareholder employee in return for the services that the employee provides the corporation before a non-wage distribution may be made to the shareholder employee. So in other words, they have to be compensated first by wages for the work that they've done or the services that they completed for the corporation, and then they receive their distribution. An S corporation has the combined advantages and disadvantages of a partnership and a regular corporation. All right, so S corporations file Form 1120S to report the income, gain, losses, and deductions of a domestic corporation or other entity for any tax year covered by the election to be an S corporation. The S corporation also has to file copies of Schedule K1 with the IRS to report shares of the corporation's income and deductions and credits. So depicted in this slide is the copy of the first page of Form 1120S, as well as the Schedule K1. So I just want to remind you that Form 1065 and Form 1120S have different Schedule K1s. So you might not be able to see it on this screen because the forms are small, but on the left-hand side of the form, just below the word Schedule K1, it will list the form number it's associated with. So you always want to just double check that to make sure you're preparing the proper Schedule K1. All right, so let's move on to corporations. So corporations are going to be the fourth type of business organization. And corporations are treated by law as legal entities. That is, the corporation has a life separate from its owners, and it has rights and duties of its own. So the owner of a corporation, they're known as either stockholders or shareholders. And it may be worth noting that one person can be the sole shareholder of a corporation, and managers of a corporation may or may not be shareholders. So in forming a corporation, prospective shareholders exchange money, property, or both for the corporation's capital stock. A corporation generally takes the same deduction as a sole proprietorship to figure its taxable income. A corporation can also take special deductions. And for federal income tax purposes, a corporation is recognized as a separate tax-paying entity. A corporation conducts business, realizes net income or loss, and pays taxes and distributes profits to shareholders. A profit of a corporation is taxed to the corporation when it is earned, and then is taxed to the shareholders when when they receive their dividends by distribution. So this creates a double tax. The corporation does not get to take a tax deduction when it distributes dividends to shareholders, and shareholders cannot deduct any losses of the corporation. So for the purpose of federal income tax, corporations can include associations, joint stock companies, trusts, as well as partnerships that actually operate as associations or corporations. All right, so the advantage of a corporation are that the stockholders have limited liability for corporate debts or actions. Transfer of ownership is easy, and stock can be sold, and raising capital, expanding the business may be easier. All right, so the disadvantages are that the corporation is subject to tax on its income at the corporate level, and then when the income is distributed as dividends, the income is taxed again at the shareholder level. So it's wise to consult with an accountant or an attorney who specializes in corporate law, as a corporation may be more difficult and expensive to organize than any other business structure. Additionally, the corporate charter filed with the Secretary of your state restricts the type of business activities and is subject to many state and federal controls. So to form a corporation, a business entity must organize by applying for a charter through the state government usually in the state where the principal business activity will occur. The charter permits corporations to sell stock to numerous shareholders. And furthermore, the corporation is empowered to create debts separate from the shareholders. I think I already mentioned, but corporations file Form 1120. So without the S, let me just clarify that it's just a Form 1120, U.S. corporate income tax return, as well as the shareholders if the profits are distributed. So we just covered S corporations and corporations. I'm going to share with you a copy. The next slide is just a visual of Form 1120. And so a domestic corporation is going to use this form to report of their income, gains, losses, credits, and to figure their income tax liability. And what I have depicted here is just the first page of the 1120 because the form is several pages long with schedules included.
I have a question.
Yes, ma'am.
Is grants, if you receive a grant and you're a corporation, like a LLC corporation, do you have to pay taxes on that?
You know what? That's a really good question. And I'm going to have to do some research to get an answer back to you. You said, so let me just make sure I heard you correctly. So if you are a corporation who received a grant, do you need to pay taxes on the grant?
Right.
Okay. I'm just making note of that.
When we do the name changes, is that updated with the IRS when we file the form, or do we have to do something different to change the name of the business?
You mean if you already have an EIN numbers associated with that name?
Yes, ma'am.
Just reading up on that earlier.
I just want to make sure what I read was correct, because I think it said that the only way it updates with you guys is when you file the actual tax return. And I guess it's like a box that you check saying name change or something.
On the 1120S?
Yes, ma'am. Well, I don't think it's the S. I think it's 1120 because it's for LLC.
Okay. All right, so what else? So at the end of this presentation, I am going to provide you all with my contact information. So I did write down your questions. So if you want to just email me to remind me, I can respond to you directly.
Okay.
I will be sharing my contact information. So moving on. My slides are out of sequence, but I will forward you copies, Deborah, and before I forward them to you, I'm going to put them back in sequence.
Thank you.
You're welcome. Okay, so the fifth business entity is going to be the limited liability company, also known as an LLC. So a limited liability company is a business structure that is allowed by state statute. And each state may use different regulations. So you should definitely check with your state if you're interested in starting a limited liability company. So owners of an LLC are called members. And most states do not restrict ownership. So members may include individuals, they can include corporations or other LLCs or foreign entities. And there is no maximum number of members. So most states also permit single member LLCs, and those only have one owner. So what's unique about the LLC is there is no, it's not an actual business structure that files a tax return with the Internal Revenue Service. So as I mentioned before, a sole proprietor can be an LLC if they file through their state. Partnerships can also be LLCs, and then S corporations can also hold the LLC status. There are a few type of businesses that generally can't be LLCs, and those include banks and insurance companies. But you should check your state requirements and the federal tax regulations for further information. And then there are special rules for foreign LLCs. So LLCs tend to be popular because owners have limited personal liability for the debt and actions of the LLC without many of the formalities of a corporation. So other features of LLCs are more like partnerships, providing management flexibility and the benefit of flow-through taxation. And for federal income tax purposes, as I mentioned, an LLC can be treated as a sole proprietor, a partnership, or a corporation. So if you want the IRS, if you want to tell the IRS how to treat your business for federal income tax purposes, you file Form 8832 entity classification election. And if you don't file Form 8832 for tax purposes, the IRS is going to treat your business as a sole proprietorship. So you want to make sure you, once you decide what your business entity is going to be, that you file that form with us right away. Like I said, the IRS, if you don't file the form, the IRS is going to treat your business as a sole proprietorship if there's a single member, or to treat your business as a partnership if it has 2 or more members. So note that even though the LLC is treated as a sole proprietorship for tax purposes by the IRS, the single member owner of the LLC generally maintains limited personal liability protection from the debts and actions of the LLC, unlike an actual sole proprietor. So where the owner would be equally liable for the debts and actions of the LLC. So there are instructions with the form that explain the classifications. And if we do happen to do a default classification of your business, you can file the Form 8832 to change it.
Can you explain a little bit more the flow-through taxation?
Okay, so there are only 2 business structures that have flow-through taxation. So the first one I mentioned was the partnership. So while you are required to file a partnership return, we don't actually tax at the partnership level. The purpose of the form is basically to just record your income deduction as expenses to the IRS and show how that profit or loss flows through to the members of the partnership. And so once you calculate your profit or loss on the partnership form, you'll file your Schedule K-1 to report those profit or losses for the members. So, and once the members receive the copy of their Schedule K-1, the Schedule K-1s are information return, and they're due, I want to say by February 15th, just like your W-2. I think your W-2 is due by the January 31st, and the Schedule K-1 might be due by the 15th of February. But it's an information return, just like a W-2, and you need the information on your Schedule K-1 so you can report your income on your tax return. So that's your first flow-through entity. Then the second flow-through entity is the S corporation. So again, you file the S corporation form, which is the 1120S, but we don't actually tax the business entity, the 1120, unless of course you had employees and you had to file W-2s for your employees. Then that's a whole other thing because you have to file your employment tax returns. But as far as taxing the entity like an income tax, we don't do that with the 1120S, the S corporation. So again, they just prepare the 1120S to report the income and deductions of the business. And once they determine the profit or loss, then they prepare the Schedule K-1s for their members or shareholders to report their percentage of that profit or loss that will be reflected on their income tax return. Did that make sense?
I understand what you're saying, but it's a little difficult for me. So I'm just trying to take everything in. I also have a question about the limit personal liability. It says it can have, and you explained it a little bit, but can you explain more about the liability for the LLC for the members, please?
So generally what, again, so limited liability, LLC, limited liability company is something that you will file through your state. And it pretty much just kind of adds additional protection for your business. So a sole proprietor can register with their state to become an LLC as a way of kind of like protecting their personal assets. Should something happen with the business. So like as a sole proprietor, as I mentioned before, you and your business are pretty much one. So if something I'm gonna just give you an example. If something goes awry in business and someone decides to sue you, then your personal assets are on the line because there's no separation. They can come after personal accounts, other personal assets, and then but the limited liability election that you can file with your state kind of provides you a bit of protection against that. Does that make sense?
Yes, but how much protection does it provide? Do you know?
So you would have to take that up with your state agency. They will be able to provide you with a bit more information about that.
Okay.
Were there any other questions?
So I thought it was fully protected. So you're not fully protected. There's a limit on protection.
Well, I don't want to say that there's a limit on protection. Again, it really is going to depend on the state where you're filing it. I know in Maryland there is full protection. I know some of you might be in Virginia, or you might be from other states. But I would definitely just follow up with.
Okay, so that would probably, that detail would probably be on, if you're in Virginia, on the state corporation website when you filed for your LLC. I'm asking, I would think.
Yes, yeah, definitely. It would be on, I don't know the exact website, but it would be on.
It's the State Corporation Commission website. That's where you can check whether or not somebody's LLC is active.
Okay. State Corporation Commission. Did anyone else have any questions?
Yes, I have a question about the 8832 form.
Yes, ma'am.
So once we submit that form to the IRS, which I did that once I got my LLC, would I receive anything letting me know that they got it? Because I never received anything, so I don't know.
Okay, so you should receive a confirmation of the election. But let me ask you, when did you file it?
December of 2020.
December. Okay, so what I can do is I can check to see what the I guess I can check in to see what the status of that particular unit is, to see if they are part of some of the units that are backlogged. And I can follow up with you, maybe see if I can get like what a possible time frame of when you should hear a response. I would imagine that you should have already received one, but that's something that I can look into.
Okay, thank you, because I never received the response, and I mailed it in once I filled it out, but I haven't received anything as of yet.
Okay. So that pretty much concludes my presentation, but I did add a few slides with some resources. I'm just going to back up a slide because like I said, my slides are out of order for some reason. All right, so the very first resource page, and all of these are hyperlinks. So if you click on them, it'll take you directly to the page where this information is found. So the very first one is business structures. And if you click on that, you'll find some additional information regarding business structures. And then, I also provided a link for election for married couples and unincorporated businesses, because I do recognize that there are a lot of husband and wife teams in business, and they may not necessarily want to become partnerships or S corporations. And they can, use that exception of the qualified joint venture to just operate as, sole proprietors. And then I also have links here for publication 334, which is your tax guide for small businesses, as well as publication 541 and 542 for partnerships and corporations. And then finally, I have the link for publication 3402, which is taxation on limited liability companies. All right, so on this second resource page, this is just a link to all of the different forms that I mentioned during the presentation today. If you wanted to just take some time to look at those forms a little bit more thoroughly, or maybe refer to the instructions for those forms to gain a bit more insight or information. And then this last resource page includes links for the Small Business Self-Employed Tax Center, as well as the Self-Employed Individual Tax Center. So in the Small Business Self-Employed Tax Center, you'll find information such as how to start a business, but it sounds like a lot of you are already business owners or have already started a business. You'll also find information about preparing your taxes, and then also filing and paying taxes. You can also find links to our online learning sources, such as the IRS video portal, some online tools and products, as well as webinars that we host periodically for small businesses. And then lastly, you can subscribe to e-news for small businesses. Now, in the Self-Employed Tax Individual Center, you'll find answers to a lot of questions, such as, what are my filing obligations and how do I file my annual return? And then I also going to be a lot of useful tools on that page as well. All right, so I know I took questions throughout the presentation, but if anybody has anything else that I can try to assist you with, I'd be happy to help. Otherwise, I can, work on the questions that you all gave me, so I can, prepare some thorough responses and forward those to Deborah.
On one of the sheets that you had the LLC, but I didn't get the publication number. It was on one of right there. I'm sorry, I got it now. Okay, I got it. Thank you.
Mm-hmm. Okay, and as promised, here is my contact information. So the best way to reach me is going to be by email. Sometimes I can't always answer the phone because I'm in and out of a lot of meetings, hosting presentations with other members of my team. But I will be sure to reply back to any emails that you guys send my way. I just want to add that I cannot provide you with account related information. So if it's in regard to, looking up a business account, unfortunately, I'm not able to do that, but I can respond to general questions and point you in the right direction for resources, or point you in the direction of IRS personnel that could assist you if you do have account related issues.
Okay, thank you so much, Anika, for your presentation. And I'm glad that we had some interaction going on this class. And we definitely look forward to the next one. Are there any more questions? Because we've got about 10 minutes, unless we're, completely finished.
There are a couple of questions in the chat.
Oh, there are. Okay, thank you for mentioning that. Let me open this up. Can a direct sales business be an LLC?
Yes, you can file with your state and become an LLC, that's not one of the companies that's restricted. That's not one of the types of companies that's restricted from becoming an LLC.
The next is, does the IRS provide tax services for small business owners?
Are you referring to like preparing your taxes and filing them?
I would believe so.
So no, we don't provide that type of service, but we do on our website, we do have links so you can find either an enrolled agent with the IRS, or I think there's some links to like some national associations of tax preparers where you can find a return preparer. We just don't, but no, unfortunately, we can't provide tax services for small businesses. There are some low income tax clinics that prepare tax returns during the filing season, but I would imagine your business may not qualify if it meets, if there's over a certain threshold of earnings. And then there may only be certain types of returns that the tax clinics prepare.
The AARP does at the public library before COVID. I don't know if they restarted that again, but they would always do it January through, or rather maybe February through April every year. When I was operating my business, I went and had my taxes done there as an LLC. So you might want to check your local library, or you might want to go to the AARP website. This is retired tax agents who are donating their time to do the returns. I don't see any more. Oh, do you file quarterly self-employment taxes for single-owned LLC?
Yes. So even if you're an LLC, as a sole proprietor, you should be filing quarterly estimated tax payments. And that really is to benefit you as the owner of the business, so that you're not surprised with a large tax bill for your self-employment taxes at the end of the filing season. So you would file quarterly taxes on Form 1040 EF, and those forms are generally due January 15, April 15, July 15, and October 15.
What form was that again?
1040 EF.
Is that an S or an F that you're saying?
I'm sorry, S like Sam.
Okay.
And what I could do is I could add a hyperlink for that form to the slides as well.
Can you give those dates again, please?
Yes, it is
Thank you.
January 15, April 15, July 15, and October 15. And again, if a question comes up, after we've already departed, you guys can just feel free to email me. I'll respond, and then and Deborah, what I'll do is, like, when I respond to these questions, I'll also CC you.
Thank you. Well, we're down to 4 minutes. I think we should hop off if there are no more questions. And I want everybody to have a blessed day. And thank you for attending today. And Anika, thank you for taking the time to share this information with us. And I'm looking forward to the rest of the series.
Yes, me too.
Have a great day, everybody.